The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Hi, guys. I'm John Logan. I'm filling in for David White. Fast yesterday and today, actually. And David will be back soon, and don't fear, he'll be back. I do a show every morning, 8 o'clock to 9 o'clock, the Global Market Pulse. We cover a lot of currencies, global indices, some of the things we feel that might be affecting the markets in the U.S. based on what's going on in the globe. And we'll be covering some of those things during this hour, but we're also going to kind of do a Dow party kind of celebration here above 18,000. Some people may be happy about that. Some people may be sad about that who are short. But we're going to cover quite a few of the stocks in the Dow and try to figure out if, some of the stocks that you may be in, maybe it's time to take some profits, maybe it's time to add up, maybe it's time to reverse the position, who knows. So, again, I've got the Dow up right now. The cat's out of the bag. The durable goods information this morning, the consumer sentiment, the new home sales, all that's out, and the market seems to like it. And we have plowed through 17,000 last week from the bottom, and now we're through 18,000 on the cash. And right now we're sitting about 18,000 on the futures. And when we look at, the inflection points to pay attention to, how to kind of maneuver through the minefield, if you will, the inflection points on the Dow right now are on the futures 17,908, and on the bottom of the long term 17,011. So we've eclipsed that. We kind of broke out here. I wasn't a big fan of going short these particular indices lately because of we look at market breadth in a different way at my company, and that market breadth is really a consensus or compilation of our market profile derivatives that we use, and those market profile derivatives have really been pointing north again since about December 9th, 10th in that general area. So there's the 9th, I'm sorry. They pointed south on the intermediate, on the 9th, 10th. That was that situation there on our daily where we had an inflection point there. This is basically the same setup on the S&Ps too. The Dow inflection points were at 17,690. We got our intermediate sell signals there on the breadth turning negative, and the breadth started turning positive again on about the 17th. So there's that signal on the 17th. Excuse me for misspeaking earlier. The long-term breadth, though, had still stayed relatively positive. So we had an intermediate change around the 9th, 10th on the S&Ps and the Dow situation. We tracked the breadth on the S&Ps, and then we had a turnaround on the S&Ps around the 17th. So when that happened on an intermediate basis, it was kind of okay to be short, not okay to be long on an intermediate time frame. And then as we turned positive again on the 17th, and I'll show you this on the S&Ps in just a second, it was basically all dials were pointing towards the long side. And I'm going to kind of show you what that means here. If you haven't watched the show that I do every day, here's the S&P 500 breadth, and those calculations are comprised, again, of looking at the internals based on our profiles and doing some summations. And I'll pull this chart up here. This is our admin version, and this is kind of I'm going to blow up the last couple of scenes here, take out the middle ground. There's that 9th, 10th crossover. And here's that 17th, 18th crossover, okay? So what does that mean? That means that our breadth had been positive from about the 17th of October, that weekend, 17th into the 20th of October, and stayed positive on a relative intermediate scale up until December 9th, December 10th. Then we turned negative for a while, caught that little downdraft. I call it little because the S&Ps don't seem to follow through too much on the downside, but this is a really good barometer to trade, indices, and we've got breadth on quite a few different things here. We've got it on the Hong Kong, the Shanghai, the Singapore, the NASDAQ. We're adding the Thai Set 100, and basically have quite a bit of information already in this scanner, which is really two tools in one. It allows you to filter instruments and also look at breadth on quite a few different global markets, but we've got about 2,500 instruments here. But going back to what I was saying, our breadth had stayed positive basically on our long-term weekly. So, what does that mean? That means that looking at the markets in general and looking at these pullbacks that happen, we were breadth positive still when we came down to that major inflection point on the Dow and the S&P. I'm still looking at the Dow here. To look at the unfair highs at 16, let's just call it 17,000, and the current unfair lows at 17,000, you'd love to see those inflection points line up like that. And then that breadth being positive, we caught that downdraft on the intermediate, and then the high probability setup was to take a shot down here on the long side, because that breadth, it's, again, not to beat a dead horse, but stayed positive on the long term. And, we knew where to put our stops down below based on that kind of concept of trading. And nobody expected that type of rally. But, my goodness, that's one for the ages here. So what do we do now? So here's the daily situation on the Dow. We crossed the borders again on the intermediate, got above 17,433, and I hate to be kind of looking backwards and giving you play-by-play by something that's already happened, but we've been talking about this on the show. Again, this is the Dow. So what do you do now? You don't short this. That's basically what you don't do, because there's really no reasons. We're making all-time highs. We're going into a statistical basically fact that the last 2 weeks of the year the market tends to drift up, and that's a very high percentage of the time that does that. And you've also got no inflection points here, no reasons to start turning and seeing new supply, as we say, happen up here to really pick any battles on the short side. So, a lot of people have been wrong lately on the short side, and they're having to cover, and they're also seeing the same things that I'm seeing right now, which are some of the basic trading 101s that I'm presenting here. So that's the Dow. We're going to look at some internals of the Dow in a little while, some of the stocks that are cooperating or not cooperating. But let's go back to the S&Ps really quick, because a lot of folks are trading the S&P futures. Similar situation on the weekly here, that we've crossed the border on the inflection points. We're making all-time highs again. Seems like I've said that so many times this past year. Here's the situation on the S&Ps, and here's those 9th, 10th areas, 9th, 10th, retesting those unfair lows, something to basically leverage against on the intermediate, and then caught that weekly bottom just like on the Dow there. But again, what do we do now? There's not a lot of things to cling on to. The S&P has a little bit of a higher profile here. 2074 is going to be intermediate support for that now, and I think all bets have to be kind of called off below 2058 and 2052. Okay, so again, why 2052? That's where kind of the downdraft started, and that's kind of a hole in the marketplace down there between 2026 and 2052, 2058. So again, that's going to be kind of the long-term uncle point, if you will, for some of the folks that are trading S&P futures on a intermediate to long-term scale. All right, so we're going to take a look at some of the things. Some things work out that we talk about. Sometimes they don't. We always try to put stops in play if those things don't work out. But, we talked about the euro this morning, and I did. If you go to TFNN's homepage, I do a free video every day for TFNN, and it's usually something in play, something that I feel like folks can get some value out of. And as I go into the homepage of the TFNN, I'm just going to show you really, really quick here. It's down on the right. It's free daily videos. So if you click that, no charge, no sign-up fee, no anything, you're going to be able to view a free video that I do every day. And that's something that a lot of, believe it or not, institutional traders look at on a daily basis. We email it out to quite a few folks, and that's how we've gotten a pretty big fan following, if you will, in the institutional world. We got a pretty good long-term contract with Bloomberg, and we do a lot of business with institutional folks. And believe it or not, they watch that video every day and they get some use out of it. We get a lot of good comments about that. But we did it on the euro this morning. And here's the unfair lows on the daily, 122.73, and we always talk about that powerful close below and retest, close below and retest, or close above and retest. And this time, the close below retest just gave you another piece of that gift that keeps on giving, the euro. And we're just drifting lower. And I really don't see any end in sight for this thing, considering also, here's the 240s. We've had a good leg down recently in the last 4 to 6 hours. Here's the situation on the 60. What do you do now? I think you just hang on to this thing and basically either use some trailing stops. I tend to use the 240 boxes, if you will, to try to regulate the trade down. And right now, if I had gotten back above 122.73, which lo and behold is basically let me pull up our daily. Yeah, 122.73 is the 240 and daily kind of Maginot lines there lining up. I'm just going to have to call it quits there. I'm just going to try to give myself a little room with this, lighten up on the position, because we've been, since 135.52, and I'm going to show you that really quick. 135.52. We've had not any reasons to really go long this thing. That's the good news. We've eliminated one side of the marketplace. And what I want to do here is also, and let me see if I got this pulled up. Yep, I do. Okay. I want to go into, I've got my Dow 30 stocks up right now. We're going to get into that after the first break, but I'm going to go into my scanner here that we've also got on the TFNN website, and you can view the archive of the webinar that I did on this if you sign up for a free trial of this. I'm going to go into my currencies. I'm going to wait for that to populate. And we've got some of the usual suspects of the currency world. We've got this ruble sitting here, which we talked about yesterday morning quite a bit. And it gives you all the major inflection points. And if you look at the Euro USD, if you can look across this, you'll see the confirmation on a profile outlook. How many bars this thing's been below 60-minute profiles, 240. And it's also giving you the inflection points that we just spoke about, namely that retest this past week of 125.74 gives you that, and then there's the 122.73. So as I look at the euro and I look at that gift we got last week, just rallying back into that major inflection point at 125.74, we got the kind of the dual time frame confirmation of getting into that inflection point and never closing above it or even above the daily, but then migrating back into the fair auction on the daily, and look at what happened. Everybody had to cover on the long side there. So again, as we go to break, we're going to come back and talk about some individual stocks in the Dow and see what's moving the Dow and see what's really not cooperating with the Dow, and how to kind of make sense of some of those animals that are in the Dow. Guys, we will be right back. This is John Logan filling in for David White, and come back to see us in just a couple minutes.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. It's John Logan. I'm filling in for David White. He is on vacation right now, and I do a show every morning, 8 to 9. Please drop by, check us out. And I think you'll get some use of it before the market opens. I promise you we'd talk a little bit about some Dow stocks since we've got Dow 18,000 right now, and kind of check out, what's kind of the mover and shaker situation in the Dow. Here's a stock that, I was relatively bearish on, Boeing, and it's obviously in the Dow. It's obviously, relatively decent sized component of the Dow. And, here's the daily situation. Recently, this 126.60 was kind of the launching pad for this. We opened up above it, did a little head fake down below, but then kind of are doing this compression, almost little mini flag here. And as we opened up above that level, and that's the level that I'm orienting stops around. I got stopped out of this trade a little bit. I thought we were going to have a breakout a little bit earlier, but this Maginot line, if you will, 126.60. We've opened up above. Yesterday we climbed, and then we've really started getting some legs to this thing. But going back into our long-term weekly, this is kind of where the genesis of the trade starts. But again, what do you do now? You've got some resistance here. Remember these profiles that I'll look at. We can pull these up in our scanner, and I'll show you exactly what's going on with them. But the most recent profiles, as in the previous profiles, have a serious relevance on what's going on in the current profile structure. So we've got some resistance here at around 130.106. I think we're trading 130.39 right now. So be aware of that inflection point, which is a big deal. 2 weeks ago, we just kind of shaved off a ton of market cap off of this stock by caving in below that inflection point. But that was basically with the Dow and the S&Ps and everything else coming to having a little Jesus moment there. But here's the situation on IBM, and these are kind of the notorious Dow stocks here. We're not going to have a chance to cover all of them. We talked a lot about regulating this trade now with profiles. Now we're back up into, with Dow 18,000, this thing's just barely kind of got back up into, and we were hoping, hope is a bad, I love that line in the Shawshank Redemption. Hope is a dangerous thing. Hope is a dangerous thing when it comes to trading. But we were kind of rooting, I should say, for a rally back up into 162.49. We're trading 162.70 right now to try to get some more shorts off for this, only stock in the Dow in 2013 that was actually down, by the way. So we've got some serious, remember, weekly takes precedence over daily over 240. On the intermediate side, you kind of had to stop yourself out there, but then you've got another inflection point to pay attention to around that 162, what did I say here, 162.49, 162.50. So now you've kind of got it in your face again, the major inflection point to pay attention to on IBM. And I'm okay picking a battle around this area with a little bit of noise factored in. The Dow could drift up a little bit farther. That doesn't mean IBM has to. That's kind of been proven by IBM's action over the past, 2 years. 2 years? Yeah, 2 years. So, again, I think IBM, if you're looking for something as a short candidate, this might not be a bad choice. But let's take a look at our scanner really quick. Again, which has a kind of a two-pronged effect. Here's the currencies. I'm going to get rid of those. Take those off. I'm going to go into the Dow 30. I'm going to pull this up. And as I look at my Dow stocks, these are the Dow 30s, and these are the Dow 30s stocks relative to our automatically outputting algorithm that is based around our kind of derivative of market profile. And as I look at this, I'm looking at Johnson & Johnson, definitely not cooperating today, and we'll take a look at that in a second. But let's just take a look at IBM, and IBM is right there, big blue. You kind of got some momentum. Obviously, it's been increasing, and we talked about that on the short side, stopping ourselves out. There's that inflection point, the 158.20, right in your face there. Here's the landscape view. Gives you all the profile information here. Here's the level of the market, and here's that weekly unfair low there. Okay? So, again, picking a battle on this, you've got another chance here around 162.50, so to speak, and this may not be a bad opportunity when it comes to taking a look at IBM from the short side again. But folks, make sure you always put your stops in, and I orient my stops around those inflection points that I'm paying attention to for you right now. When we come back, we're going to take a look at a couple other stocks here, and take a look at crude oil and a couple other things that you might want to pay attention to as the end of the year creeps upon us. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. David's off today. This is John Logan. Thanks for joining me. Do a show every morning from 8 to 9, the Global Market Pulse. Would love to have you hang out with me, and we can talk about some things pre-market. You can call in, and hopefully we'll solve some equations before the market opens. As we look at the rest of the Dow here, this is our profile scanner. This is our grid to show what's going on here in the Dow world relative to our profiles. And I'm looking down the grid here, and I'm seeing some things. Actually, I'm looking at Merck. Couple of inflection points lining up here, but let's take a look at Johnson & Johnson first. This is the one that's kind of piquing my interest a little bit here. Remembering that the breadth is positive, let's take a look at Johnson & Johnson here. We've had something compressing up here, the all-time highs, top of the box here. Couldn't get through our profile unfair highs here, but right now we're back in the fair auction. That's our long-term view, but from a trading standpoint, our daily profiles given by the scanners, we mouse over. Here's the situation, kind of on the stop out point for me. Had something kind of gathering momentum here. The Dow rallied significantly lately. This thing has really been kind of consolidating above unfair highs. But then we had that news announcement today, moved down, stops below 105.69. Just have to kind of do it. Then we got 103.14 sitting down here, and that's well away from 157. But again, I'm kind of a stingy trader myself, and the all-time uncle point on the intermediate, you got almost like a change in direction here. Okay, I'll move away just an inch. Somebody's telling me to get away from the mic. Is that a little bit better? Maybe. Okay, cool. All right. So again, profiles kind of regulate the trade for me, and right now Johnson & Johnson is Dow making all-time highs. This thing's not acting extremely well here, so I'm going to use those inflection points to kind of pay attention to. Let's take a look at MRK, and this is the one. As I look at the scanner here, and I'm going to pull this up, boom, there we go. If I set a rule, and I'm just going to go over here, I'm still looking at exclusively the Dow. I'm going to go in here and I'm going to look at weekly unfair. Let's just look at bottoms, and it's going to pick out some opportunities of stocks that are kind of hanging around the lower parts. Okay, let me. Are we good now? Showing the right screen? Okay. Sorry about that, folks. Sometimes this screen mechanism of showing just flips out a little bit here. All right, as I'm looking across here, I'm looking for things that are on their all-time, not all-time, but unfair lows of our long-term profiles here, our weekly. So I'm looking at Merck, and I'm going to kind of point this out. It shows sitting at the bottom, dual time frame lineups here, bottom, and even the 60 bottom here. So let's take a look at Merck. Let's look at our landscape view. We're sitting right above the weekly and daily profiles here, but let's take a look at what that means on the charts. Sitting, and this week we just come right back down into 56.91 unfair lows and 57.12. So again, we've got about a 21 cent DMZ, if you will, of unfair lows on the daily and unfair lows on the weekly. You could look at this as, hey, it's a nice healthy pullback, and this may be a support area buying opportunity, but considering the way the Dow has moved significantly up and on a relative scale, you want to try to be buying strength and selling weakness in situations like that. And also considering that the Dow may drift up a little bit higher at the end of the year, if we don't have that happen, this candidate right here, shorting below 56.91 and 57.12, that little DMZ, this may provide a decent trading opportunity. Here's the daily on it. And, things that are sitting on these profile lows like this in a strong market, may just do a flush here. You've got to pay attention to that. At least it should be on your radar screen. I don't think this is the drug sector in general is having some problems here. Gilead Science, I mean, that's kind of all over the news right now. And, these drug stocks may be heading a little bit lower here. So this is something you can at least orient stops around if you're going to play that game. Somebody was asking in the den why I went to the Philippines. Actually, I spent about half the year in the Philippines, and that's also half of that time in the Philippines is in Hong Kong. We do a lot of business in Asia, and we've got a contract with Bloomberg, and there's a lot of users in Asia. They've been increasing their user base over there. So being in this, global internet kind of be where you want to, I guess, situation, it was a decent place for me to operate. I've got a support staff there. We outsource some of our programming there, and I own an outsourcing company there. I also have a call center there. So there's a lot of reasons. Interesting time to watch, to say the least. But I travel back and forth to Hong Kong, Singapore, Jakarta, Shanghai, Beijing, Kuala Lumpur, the whole 9 yards of the big cities over there. And I'm looking forward to actually spending some time in Ulaanbaatar, which is up in Mongolia. They just opened a Bloomberg office actually in Ulaanbaatar, and there is a ton of money going into that city. The mining in Mongolia is off the charts now, and there's just literally financial managers in Mongolia, believe it or not, of all places, that have so much money they don't even know what to do with it, and they definitely don't know how to trade, in my opinion, some of them. So they're looking for help. There's a Bloomberg office there, which is almost amazing. Can you imagine Bloomberg decided to put an office in Mongolia? I used to spend a lot of time in Raleigh and Charlotte while I'm here in North Carolina, but we can talk about that on some emails. My email is Logan, JLOGAN at TASprofessional.com. Danny, I'd love to, shoot the breeze with you about that. So we talked a little bit about Merck. Let's look at another stock that is in that drug type environment, without question, Pfizer. And a lot of these took it on the chin today. Here's Pfizer. Pfizer came down today and hit that inflection point and bounced off, so 30.83. These are inflection points to kind of pick battles around. And again, the scanner, I'm going to pull that up, show you. Caterpillar I want to talk about a little bit too. There's International Business Machines, IBM, with that bottom sitting there. But let's take a look. Let's just kind of kill this sort, and let's pull up Pfizer. Let me find Pfizer. Well, let me search for Pfizer. PFE. There we go. And it's in here. I can't seem to find it. Where am I missing something here? There we go. Here we go. It was in there. I'm sorry, guys. Yeah. So there's Pfizer. There's the inflection points we were talking about. There's that 28.55 unfurled on the weekly, and then there's the 30.83 area, bottom of the box on the daily. So, and here's that landscape view. There we go. We kind of came down to 30.83 and bounced off. Didn't have to do that, but it's kind of interesting that, within the kind of the torrid situation of the drug sector today, that Pfizer's actually showing some strength. And what do we do now? That's the big question. Again, here's the 240 profiles. We're still kind of sitting below there. In my opinion, you could find better longs. And the short situation on this is, getting back below 30.83 and put some stops in. And I think this is just kind of a wait and see. Let me go down to the ETFs here for a second. Let me find those. And the XLV, the healthcare sector. Again, here's the weekly on the healthcare. Just, we talked about Merck and Pfizer, Johnson & Johnson a little bit. There's the 69.34 kind of, long-term support that we were in at the beginning of the week, and 69.37 sitting there. So let me restate those numbers. 69.34, 69.37. We had those, weekly and daily lineups there, and we were sitting pretty, nice and pretty sitting above there. But again, these are great areas to orient stops around, and we've come down 67.72, considering that the Dow and the S&Ps and the NASDAQ may just kind of drift higher at the end of the year. That rising tide is going to lift all boats kind of feeling. You've got a chance to kind of pick some battles on support down here, but you probably have some chances to buy some better long opportunities. But I'm just stating some of the things here. And by the way, if you're trading the XLV, stops can be oriented around these types of possible bounce areas. And that's just the way I'm looking at these right now. I don't see these. I don't see any sector just getting hammered right now at the end of the year. After the beginning of the year, that might be a different story. So even the energy sector is up today. But let's take a look at some of the things in the Dow other than some of the drug stocks we've already looked at. I want to look at General Electric. And here's General Electric. And, hadn't been the greatest performing stock, but again, the Dow's moving up today, and so are the other. I think the Dow's up over 100 right now. I think I haven't looked at it, the total here lately, but 25.89. Now, this is something that I'm not extremely bullish on. And if we can kind of migrate back down below this inflection point, 25.89, you might be able to catch a little bit of a short, catch some offers on this a little bit, as they say, instead of catching a bid. But again, you've got to keep in mind that you want to see this get back down below it. You want to see some new supply appear, at least on the short term. And we've kind of eclipsed some things on the daily and the 240s here. So you want to just wait. A lot of times people say, well, shouldn't I be selling things as they go up and buying things as they go down? Sometimes you got to wait for some, conviction and some confirmation on some of these moves down to short things to kind of get below certain important levels. And this is the case with GE. And, keeping in mind also that we may drift a little higher as the indices just kind of elevate at the end of the year. That's something else to keep in mind when you're trying to short anything right now. So that's another Dow stock. And we also want to look across the board here, just going back to our scanner on Dow stocks here. I want to take a look at, these are our Dow stocks. What's kind of, it's not really Nike. Let's take a look at this. NKE. Boom. There we go. All right. So, again, stocks that are not just kind of blowing the doors off here. This is something, you can find, in my opinion, better long candidates. This is right in the middle of a profile here. It's right in the middle of a profile in our long term. Not participating in this last bit of by the Dow lately. 93.27 unfair lows, 94.04. So you've got kind of a dual time frame lineup down there, and if we can get below there, it might be a short candidate. But again, I just hesitate to short anything right now. And it's difficult to buy some of these stocks that are up in the stratosphere. I think some of the best plays lately have been the currencies, and it's been difficult for me to, as valuations in the stocks in general have been multiples have been kind of going up here. These are the things that have really been moving, these currencies. I'm going to take a look at the yen really, really quick, getting away from the Dow for a second. We talked about not shorting the yen ever and trying to find opportunities from the long side as often as we can. Now we've gotten above weekly unfair highs, 120.42, and that 119.91. We kind of are getting out of that, dual time frame DMZ up there, and I've been a big fan of going long the yen since the 100.01 area, and that's kind of way back where. And we've had some good opportunities with pullbacks into support and letting the dailies kind of regulate this trade. Got stopped out there for a little bit, but it's okay to get back on the long side when we get back into some of these fair auctions on the end and move higher. Guys, we will be right back for the last 5 minutes of the show, and hang in there and call in if you'd like.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Hi, guys. Welcome back to the show. I'm John Logan, filling in for David White today. We're kind of talking about some Dow stocks and some of the ones that weren't cooperating, just to kind of keep on your radar screen in case the Dow ever does turn around, and ever. Wanted to look across the board, some of the things that have been, really almost make your whole year type trades. The currencies, we've been, really hammering the shorts on euro, going long the Japanese yen, or the devaluation of the Japanese yen. The Australian dollar has been the latest thing that's just been the gift that keeps on giving. And, when you have these central banks or government MOs that are coming out that they want, certain things to happen, and they're going to make sure certain things happen, as in the devaluation of the yen, the U.S. Treasury, the Fed wanting to keep buying U.S. Treasuries, the euro, the talk over there, you can't stand in the way of those trades. And as a trader, you might as well not try to outthink anything and just kind of go with some of the easier situations on the board at the time. Here's another one. Here's the Australian dollar. I mean, they came out, this is our weekly view. They came out back in, September, late August, September, started talking about they wanted to compete more, free trade agreements, things like that, and to enable that, they need their currency lower, and it's kind of stays in tune with the race to zero on who can devalue the lowest seemingly, but and the dollar's getting the, I don't know if you can call that the benefit of all that, but here's the latest on the Australian dollar. This is, again, using the profiles to regulate this thing down. Hadn't given you a lot of reasons to, go against that type of stance on the short side. And here's the latest. Here's the 81.35 area. Again, the breakout and the retest down there. Crude oil, again, this has kind of been the gift that keeps on giving too. And I've got a natural gas situation to show you in a second, but here's the crude oil. Here's the February, and if you can find opportunity. Now we have a new weekly profile that's attempting to appear down here. We'll know about that by Friday. This is a long term. That's the 100 area. Here's the daily. So we've had a new supply area appear down here. We've closed below it, retested. I got caught up in this trying to short this again around the 55.11 area. But we've kind of been using that now, not getting back down below it really. And the optimal, again, retracement, in my opinion, on crude oil is going to be in that 60.94, top of the box on the daily. It's kind of like time to stay out of the market for the most part on the intermediate. Here's the 240s. We're kind of poking our head above profiles for the first time in a while. So this is, again, our shorter-term time frames. And, again, I think the crude oil is kind of a wait and see right now. I hope we can kind of migrate up into that 60.84 area that we just talked about, or 60.94, on crude oil to provide a little bit higher probability situation to get into. Here's natural gas. Here's the 3882 area that we kind of broke below, came back and retested and started our southern path. Here's the 3631 to give maximum confirmation here, and there's really nothing down here. Andy Hecht is a great analyst on commodities in general, and you probably ought to listen to him on what might be in store next for natural gas, but I've actually been hearing the two-handle term lately on natural gas, so this may not be on sale down here yet. Guys, you've been great. We'll pick it back up again tomorrow. Or next week, depending on how your vacation goes. It's been a pleasure to be on for David White, and we will see you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.